What is going on, Alpha Hunters? Hope everybody is having a very fantastic Friday. And it also is a very free fall up Friday because the market just keeps going higher. I guess that makes sense because nothing else really matters. And yeah, we just keep pushing higher on the market. Celebration though, we did get to 500 on the SPY. I'll briefly talk about this. So briefly got to 500 here on the SPY yesterday at the close of the day. We actually briefly got to 5,000 on the SPX, very briefly. But yeah, very clearly over it today. So looking pretty good there on the SPX. Anyways, let's just run down kind of what's going on today. Nice little gap higher today. Nothing crazy. That was very, very little. Nice push higher here for the first hour and a half. A little bit of a settle out there, kind of mid morning, and then past couple hours, we just kind of continue to push higher throughout the day. And gonna look at, is everything going higher, or is it just still being led by just like a handful of stocks? That's possible. Qs. Well, they've been the stronger part of the day compared to the SPY and Qs. The Qs have been pretty good. Nice little gap up, a little bit of a pullback there. Very strong push there the first hour and a half. Sideways there for about an hour. And then has continued to push here. Bullish over the past hour and a half. All right. IWM very strong today. Up 1.5% here. Nice. Higher open, kind of sideways there for the first 2 hours, and then for about 2 hours after that, it kind of went on a pretty good run. Past 30 minutes, a little bit of a pullback here into the moving averages, intraday, 5 minute time frame. So nice look there on the IWM. DIA, nice little, not really big gap, but nice pullback here. First 2.5 hours. Push higher here over the past, I guess then the next hour and a half. A little bit of pullback here over the past 30 minutes. Looks like we might push higher here. Continue to push higher. I wouldn't doubt it, honestly, if we continue to push higher across a lot of these markets. People are going to start to look for other things. People are going to chase things. So, yeah, it is what it is. Not really too much of a gap here on the RSP. A little bit of a gap down. Kind of looks like the DIA here on the RSP. Traded lower there for the first couple hours of the day, and then the middle part of the day. Nice couple hours back to the daily high, getting back positive, looking pretty good. Currently at the daily high right now. So yeah, the RSP though was a big underperformer it is a big underperformer for the day, but yeah, just definitely a big underperformer for the first couple hours of the day. Definitely just was not trading higher at all, but yet the SPY and the Qs both were trading higher. So whilst a majority of stocks were actually selling off, you actually still had the market cap weighted indices still continuing to push higher. So kind of just lets you know the concentration that's still out there going on. RSP though still just consolidating. It looks like it wants to push higher, but you kind of thought it would have happened by now here on the daily. This thing needs to do it early this next week. Maybe we'll see it by the end of day today, here in the last 2 hours, push up. At least get above all these highs a little bit. Maybe close around 159 by the close, or get up to the 159, higher than 159 by the close today, and just hold there. Jeez. DIA, Dow Jones Industrial Average, not making another high. A little bit of a pullback day today. Nothing crazy. Hasn't really broken any downtrends. Could just be resting, consolidating. Yeah, there you go. IWM. Okay, so this is the spot. Kind of mentioned this on Wednesday. If we get through these 10 and 20, it's probably just going to go. That was the trade to do. And it was probably going to go to this upper zone. This first zone probably made the most sense to me. I mentioned that on Wednesday. So yesterday we clearly got that breakout yesterday, and that happened pretty quick. I go to a 15-minute intraday chart. So looking at yesterday, it happened pretty quick there. First like hour and a half, and then kind of a little sideways chop there, and then it continued higher for the rest of the day. Today we actually opened higher, a little bit of a gap up, sideways chop sideways for a little bit, and then here over the past couple hours, it's definitely pushed a lot higher. Black Beauty, what is going on? After London closes, it seems the market is just dead. No more power. No more power hours. After London closed, I don't know. I don't even keep track of when London closes anymore. I mean, it's the last 2 hours of the market for the week. We'll see what happens for the last 2 hours. But IWM though at a pretty good spot. I would not want to be bullish right here, right now. You're maybe looking to see what kind of setups as we go into Monday. It looks like we did barely snag that high from January 29th. Yes, we did by about 14 pennies. So, yeah, I would look for a little bit of a retest. Maybe we get some of that. Maybe on Monday here on the IWM. Maybe we continue higher because we do have higher lows coming in. Obviously, we did just put in a higher high between the late January high and our recent high today. So, I would just say maybe look for a quick little pullback there on Monday. And then take that bullish. Try to look to be bullish on that. Qs though, Qs continue to push higher. Nothing really stopping it. I mean, there's no levels above it. So, yeah, it looks like it's accelerating. All right, cool. Up 1% on the day. SPY up 0.5% on the day, continuing to push higher. Looking pretty good. Just continuing to grind higher. That's all you need to know. Take a look here at the heat map, though. It's not all kind of like what I was mentioning when I first got on the mic. It's not all green out there. There's a lot of red. Energy's hugely red. Staples, a lot of red. There's a lot of gray out there in financials, retail, except for Amazon, obviously big tech there. Tesla's actually doing pretty good today. Consumer services a lot of them are down. Health care, health technology, health services. There's some green there in health services, but health technology is not doing all that great today. There's a lot of gray, a lot of neutrality out there. So outside of concentrated areas of big tech, which is where the market, the weighting is. Yeah, it's not. It's not all that great. I mean, it's almost like the market's just being held up by like two names. I'd say Amazon, Nvidia, but then you also got Alphabet and Microsoft. Tesla's also doing okay. Amazon, or not Amazon, AAPL is kind of flat, not really doing a whole lot. So, all right, we'll see how they look on their charts, but yeah, for how much bullishness we continue to see, it's not like it's everything is just absolutely grinding higher. All right, so that's a quick rundown of the markets. Let's see, VIX not really doing anything, just kind of hanging out. Dollar, okay, I'm starting to like this base here of this dollar. Starting to like this base. We kind of had that upper wick come in yesterday. You're thinking maybe we're gonna roll down, maybe it continues down today. No, this seems like it's basing pretty good here. So if this continues to base, next week could be pretty bullish here. What do we got as far as data next week? So we get inflation next week. Okay. So next week we're going to get inflation for the January inflation number, CPI number. And then looks like a big one. Buildings. And then PPI. We're going to get PPI, Consumer Sentiment Survey. That's not a big deal. That doesn't mean anything. So next week, inflation data is basically all the big stuff. Retail sales, that's all right. Brad, what's going on? My SP 500 end of week prediction came true. You did. You. Well, I'm just curious. Are you thinking we close over 500 at the end of today, or are you just saying, hey, we hit 500 by the end of the week? Because I do remember you making that call, man. It was a pretty good call. Are you thinking we close over 500, or do you think we're going to get over 500? Gold, GLD, interesting. Dollar not really bullish, but gold is down a little bit. All right, still looks like it's going to put in a pretty good consolidation area here. 10-year yield looking pretty good here. So, yeah. Brady said just hit it. I don't think we close above it today. Oh, you think we get a little sell-off to close out the week? All right. So Brad's getting the double call in there. He said, "Hey, no, wait, we hit 500, but we're not going to close over it." All right, interesting look. So it was a good call though. 500. It's not one that I thought it would happen, but I mean, what the hell do I know? I haven't been right on the market. I haven't been right on the SP 500, SPY over the past. Shoot, what are we going on now? Like 6 months, 7 months. So it is what it is. 10-year yield though. So I'm liking this because it's kind of looking like a dollar. The 10-year yield base pretty good this week. Definitely back on Wednesday. It's going to end up at the weekly highs for the most part, unless we drop off here over the next couple of hours. But this looks pretty good. We pop up out of here 4.2 level. I was kind of thinking maybe we might do that today. But if we pop up over 4.2 level as we go into next week, yeah, because you can I mean, it's having a hard time getting over that level, but it's slowly getting there. Slowly getting there. So if we pop over it on Monday, which we might not see much activity on yields and stuff until we get CPI or inflation data on, I forget what day, 13th. 13th, that'd be Wednesday, I believe. Or is that Tuesday? Tuesday morning. 10 to 2 inversion, not doing a whole lot. All right. HYG. Interesting. HYG's up. Okay. Let me. Because I thought that. Yeah, I mean, 2 years up. Which the 2-year actually snagged this high from back in January the 5th. I remember that pretty volatile day. Kind of mentioned like, hey, you're gonna play bonds whichever way they go, whichever way this kind of breaks, and then it got the break there a couple days later, and it broke down. You played that quickly, but we've gotten a double bottom here on the 2-year. This is the 2-year. Trading back higher, has now taken that very quickly, that upper wick back from January. Have not held that, obviously, but doesn't mean it won't continue as we go into next week. So that's interesting why the HYG, though, is up 0.25%. Because that doesn't really make sense unless people are just buying into bonds. That's all that means, I guess. It's just, capital flow matters more than relationships. Because relationships can deviate. Capital flow just matters. It just pushes prices. So HYG, though, looking pretty good there. Nice little bullish push. Still might just be sideways consolidating here at the support and resistance level. So, yeah, there you go. But the LQD and I'd imagine TLT are probably both pushing down. Kind of mentioned this one yesterday. That was going to be the lowest close that we were going to have going all the way back to December 12th. Closing below that 50 EMA was kind of a big deal because we bounced off of there earlier in the week. So, going to have 2 days back-to-back here closing below the 50 EMA. So where is the 100s? And I guess the 200. The 100, 200 are going to be down here around 106, 105.50. There on the LQD. Whoops. Oh, I hit the wrong button. That's what it is. So I imagine probably just going to continue bearish as we go into next week. It's going to depend on inflation when we get to Tuesday. So Monday we'll talk about that, but it's going to depend on inflation, what that continues to do. Yeah, what inflation comes in on Tuesday is really might determine how some of these bonds, if they keep dropping off or not. So if inflation ticks higher, bonds will definitely keep dropping because yields will probably start climbing again. So we'll see. We'll talk about that next week. Monday, Tuesday, that kind of stuff. We'll talk about it. TLT though, I was pushed a little bit lower. It has not broken that January low yet. Might just continue to push down. Well, which is kind of interesting because the 10-year yield's closer to breaking this yield top from January than the TLT is price wise. close to breaking down. So okay, all right. Maybe we'll see that happen next week with inflation. All right, let's take a look. What is going on with sector performance? I'm gonna imagine it's all big tech stuff is doing it's the best that they can today. All right. Yeah. Okay, that makes sense. So we saw a lot of red with energies, staples. So that makes sense that they're underperforming. Healthcare also underperforming. Industrials, real estate, materials, utilities, communications, and financials all underperforming. Discretionaries and tech outperforming. Those are the only two sectors outperforming. And really, for most of the day, it really was just tech. Tech was just the only one outperforming. I mean, it wasn't until about an hour and a half ago when discretionary actually started outperforming, a little bit over an hour ago at least. So, what does it look like intraday? Well, I was kind of noticing the energies definitely were doing pretty good to start the day, but that first 2.5 hours, though, outside of that 15 minutes to start, it just dropped off pretty hard. Hasn't really ever bounced off the lows of the day, though. Go take a look at crude oil and some of that stuff. Yeah, tech looking pretty good. Discretionary, as you can see that run it had midday. Everything else kind of in line with the market or underperforming. Staples underperforming. Okay, let's go take a look, see what's crude oil is doing, or at least the. All right, well, that's interesting. So crude oil's up actually. Gasoline is took the high from late January, not took the high from late January, not exactly holding that high because it's not going to. It's not even going to get a chance to, really. So, okay. Anyways, gasoline kind of throwing a little bit of upper wick there, possibly topish. Heating oil. Wow, heating oil. Nice bounce. Jeez. I mean, just continuing to push. Crude oil, though, kind of looks like gasoline more than heating oil. But yeah, heating oil. That's a good move on heating oil. Jeez. Very good move. Okay. So, but what's going on with some of these energy stocks? Because they are not doing well. Yeah, look at Exxon. That is exactly how the XLE kind of looked, right? Yeah, I mean, that's exactly how the XLE looks. Jeez. Chevron looks like that. ConocoPhillips looks like that. So some of these are definitely getting hit today. So ConocoPhillips had earnings yesterday, most likely in the morning. Yep, yesterday morning. Upper wick, selling off today. Chevron. Bearish engulfing candle today over yesterday. Yeah, that looks rough. That does not look good. But none of them. Well, ConocoPhillips is getting below its moving averages. That can be concerning. Exxon's kind of getting into them today. What about P66? Phillips 66. Not really doing a whole lot. Just kind of hanging out. Valero's grinding higher. Heating oil might be helping out with Valero, since they're a traditional refiner. They're not really tied to crude oil specifically. MRO, Marathon Oil. This is more of the oil side of Marathon. MPC is the refining side of Marathon. You can see that they look a little bit more. That looks a little bit more like Valero. Let's see, Oxy getting hit as well. Okay. Let's see, what else? Is that a lot of them? That's pretty much a lot of them. I haven't checked on Hess and Devin in a long time. Yeah, I mean Hess is getting hit pretty good. What about DVN? DVN get hit pretty good. Okay. Let me know if there's anything you guys want to take a look at to wrap up the week, though, because there's definitely some things moving. I'm gonna run through big tech real quick just to see how they all kind of look. AAPL hasn't really done a whole lot up until its Wednesday gap up, or since its Wednesday gap up, really hasn't been the brightest star. Okay. Anyways, there's AAPL. Microsoft, yep, looking pretty good there. Continuing to push higher, up 1.4%. What else? Alphabet breaking up. Pretty good there, up 2%. Okay. Meta doing all right. Not really doing much. It's kind of just resting, waiting for the moving averages to kind of catch up. Got it pretty extended on that earnings gap up. Amazon up pretty good today, up 2.8%. There you go. Looking pretty good. Tesla. Yeah. Yields are pushing higher. Tesla's pushing higher. So I think Tesla just got overextended to the bearish direction. And probably going to push higher on Tesla before it rolls over. So, yep. Yeah, it's all right. So that's Tesla. What about some semiconductors? Nvidia, we know, has continued to push higher. It's up 22 points today. It's up 3.2%. It continues its dominant run. It is currently at a 1.8-ish trillion-dollar market cap. Looking pretty good, man. It's continuing higher. AMD. AMD looks like it's starting to consolidate here. We'll see. It's going to take a little bit more time, but if we break down and get below this low of January 31st, sometime soon, I'm going to say sometime soon, because if it does it like later on, I mean, the 50 EMA will come up and might support it at that same spot down the line. Or if we break above this high of February 5th, take it bullish or bearish if we break those levels. Let's see. So that's AMD. What about AVGO? Nice gap down here on AVGO today. All right. So gap down, but has traded higher. Up 1/3%. Not really doing a whole lot. Intel has been trying to base here at this level for about the past week. A little bit longer than a week. Bounced up to the 10 EMA today. See if it gets pushed down or if it gets through that 10 EMA. It's very important that it does. Okay, so that's Intel. And then let's see, Qualcomm. How's Qualcomm doing? Qualcomm's up 2.3%. Looking pretty good. What about, let's see, Micron's kind of not doing much. All right, TSM was skyrocketing the previous 2 days, up 1/4%. Nice little lower wick. Looks like people took the opportunity to sell some profits this morning, and other people took the opportunity to buy in. There you go. LRCX, Lam Research. Lam Research looking pretty good here. Pushing higher. Up 5%. Looking pretty good. There's not much else to say about that. All-time high area. Yeah, it's going to probably just keep going. Not really much else you can do about it. AMAT. So, SP 500. What you need to No. Doesn't look like there's anything newsworthy today. Was there anything on LRCX? I didn't really notice. Lamb Research keeps dividend. Okay. No. Oh, they're just having good days. Okay, so AMAT and Lamb Research are just having good days. There you go. What are some of the other ones? KLAC. KLAC having a good day. Yeah, doing pretty good. So let me see. Is there any more in here? AMAT, LRCX. There's no more in here in the producer manufacturing. So, okay. I know some of these are like, these are international. Some of them are like European and stuff like that. So I don't remember all of them off the top of my head. Other people are way more sophisticated about that than I am. I keep my trading and investing simple. I don't think we're gonna get below 500 by close, man. I think you should just stick with your, yeah, dude, 500. 500's the money line. I'll take the over. Oh my goodness, it's crazy. It's funny and it's crazy. How stocks could keep setting records if Mag 7 slow. Oh, I'm interested. Lose steam? Yeah, I'm curious. What do you got to say? Not that I really care. The S&P 500 is hovering around 5,000 for the first time ever, and once again, the stock's leading it higher. The biggest members of the benchmark, average, blah blah blah. But not all have. All right, Apple, Alphabet, and Tesla are having a choppier start to the year for some on Wall Street. This is becoming a concern as a shrinking number of stocks are leading the major average higher. Yeah, no kidding. Jeez. Fortunately for some investors, even if top stocks are peaking, the market should probably still go up. I like it. Market should probably. I mean, that happens all the time in finance. Should probably, most likely, hedge words, man, hedge words. Nothing's a guarantee. Nothing's a guarantee in finance. A recent analysis of BMO's capital markets chief investment strategy, Brian Belinsky, showed that even when the top stocks driving an outsized market of the market action fall off, part of the market action fall off, returns over the next year in the index historically have been quite good. Okay, well, all right. Here's the chart, I guess. S&P 500 can perform when large stocks and leadership fades. S&P 500 performance 1 year after relative performance of 10 largest stock positions peak. This, yeah, but I don't like that year. Comparing it to that year, this year makes more sense to compare to. 98. So in 98, so you're saying in 97, the concentration stopped performing, and so that was the beginning of really like the blow up top of the couple years of the tech bubble, the dot-com bubble, sorry, was 98, 99. Because a lot of other things actually kind of did go into recession in like late 97, 98. 91, 92, yeah, sure. 2013. This was the change, though. This was the change from when energy started getting overtaken by tech. It was basically like 2013. 2019, sure. This is the only one that seems comparable to kind of how we are now. Not saying that we're going to go down 22%, but something like this is. I mean, the GFC, the year after the GFC. Come on now. The market was bound to bounce. And financial companies have been hit so hard that year. Here's my biggest issue. Let me see if I can find this on X. Actually, I'm gonna see if I can find this because this is a good talking point. Oh, did I? I wonder if I did I not? Dang it. Let me bring this over. So I kind of like this chart. I always like it when people do the work that I don't do. It's always good to see this kind of stuff. But basically, this chart is one that kind of shows you all these like little gray squigglies that break off from the black line are what the market was expecting for the Fed funds, right? This is the Fed funds expectations versus realized, and obviously the black line is the actual Fed funds, and all the little light blue or gray squigglies. These are all the market expectations, and the market's been expecting Fed to be dropping the Fed funds for a while. So the market's usually never right when they want it to be. And then it just happens, and then it's like, yeah, see, we knew the Fed was going to raise rates here in the 16, 17, 18. We knew they were going to do it, but yet they were calling it for the previous 6 years. It's kind of funny how that goes. But anyways, there was one I saw this morning or last night, basically kind of talking about how where we are in our market cycle and that kind of stuff, and it was kind of the breakdown of where the market performance over the past few years has kind of come from over the past 4 years. And 2023 was all about margin expansion, which not margin expansion. I'm sorry, multiple expansion, which basically multiple expansion. All that is essentially is it's just made up premium that market participants are willing to pay. So if they're feeling good about stocks, multiple expansion goes up. If they're not feeling good about stocks, multiple expansion goes down. So if you're feeling good about stocks, you're going to pay a multiple. You're going to pay a premium, and that's what expanded last year. The other thing that actually where value was, or where you saw returns last year was from earnings growth, and that's the part I wanted to talk about because that's probably what led to multiple expansion was earnings growth. But earnings growth over the past year, I'll say over the past year, since we're in earnings season now, we've seen some earnings. This cycle has been about. Let me go to intraday and we just kind of let this run. Has been about really cost cutting outside of like a handful of companies, and I mean not even 5 fingers handful. I mean like maybe 2 or 3 that actually have revenue growth. Okay, most companies are increasing earnings because they are laying people off. Nvidia, one of the few. Now I will say that Nvidia is one of the few. Definitely looking forward to the earnings that they're going to be having here. What is this? Wednesday, February 21st. But just go in, look at their earnings, and look at their revenue. Their revenue has been growing. And you can also come into the statements area. You can see total revenue year-over-year growth. Past 2 quarters, revenue year-over-year growth was 101% revenue growth 2 quarters ago. Last quarter, it was 205% year-over-year growth. So yeah, they're one of the few companies growing like that. What about some of their counterparts? What about AMD? AMD just had earnings, so we actually have more recent data for AMD, but year over year growth. They actually, 3 quarters ago. Oh, I'm sorry, 2 quarters ago, it was actually negative 18%. Last quarter, it was plus 4%. This is year over year. Year over year. This quarter that they just announced, it was 10% increase, which is not bad. It's an increase of 10%, but if you go back and look at what it was 2 years ago, it was also at 6.5 billion. What it just was announced was 6.2 billion. So outside of Nvidia, most companies are increasing earnings by laying people off, and that is the typical normal thing you do at the end of every bullish phase of an economic cycle. You increase your revenues, you continue to grow your business, you don't cut your expenses, you actually keep increasing your expenses because you got to keep growing the business, right? That's how every company does it. You increase your revenues, you got to increase your expenses, you got to hire more people. Everybody's in a fight to increase the market share, to grow the revenues, because the market share is what it is, and if you don't get all of the pie that you can get, then you're out it. Like it's harder to get the pie from and take it from other companies and other competitors. So it's easier to go get it when nobody's gotten it. Okay, so when you're developing these new technologies and new products, it's better to expand very rapidly and worry about cost cutting and optimization later, because it is so much harder to expand the revenue and bring in new business later when other companies and other people, other businesses are already using a product that's similar. It's basically the point. So what you do in normal economic bullish cycles, like what we had in 2010s, and everybody talked about this in the 2010s, was revenue growth. You know what you don't hear about anymore outside of like Nvidia? And that's why everybody's clamoring about Nvidia right now. Why everybody's clamoring about Nvidia is because they're actually one of the few companies that have revenue growth. One of the few, especially how much they do have it. So when you hear companies that are having earnings beats of, let's see, who was a good one? Amazon. Amazon's a pretty good one. Let's look at their earnings. They're having a good day. Let's look at their earnings. All right, so here's their revenue. I mean, not crazy. It's been pretty consistent. Let's see, Q4 of 22 was around 149. Dropped off to 142. Then it grew to 134. Last quarter it was 143. This quarter was 170. That's pretty good. They had a year-over-year increase of about 14%. That's not bad. But you want it to be over 20%. Those are growing companies. When it's over 20%, even more, even higher, and that's what you were looking for back in the 2010s. You were looking for companies that had year-over-year growth, sometimes even quarter-over-quarter growth over 20%. You were looking for those companies that were growing. But now it's so hard to find that. But what they're growing now and what they've been growing, you didn't see their revenue didn't grow that much between Q2 23 to Q3 23. They didn't grow that much, but yet their earnings went higher. So if you go back and look at their statements, let's see, operating expenses. Yeah, they're mostly holding them flat, kind of down. Kind of. So that just means for all the revenue that they're bringing in, they're holding down their expenses by laying people off. And Amazon's such a tough cookie Let me just go to Meta. It's a lot easier one to analyze because Amazon's got two businesses that are massive and they have weirdly different headcounts. So that's a really tough one to kind of look at. Meta's done a lot better here over the past couple of quarters. You can see over the past 2 quarters, year-over-year growth. Last quarter was 23%. This quarter, 25%. We'll say 25%. So a lot better. They've gotten a lot better about growing revenues. But most of their revenues come from advertisers. Advertisers can pull funding on a heartbeat. But they've been having layoffs, which I'm kind of surprised is not really a little bit more obvious here. But they've been laying people off. Maybe this was some of the layoffs that they had last year. I'm kind of surprised their operating expenses actually increased as much as they did. So this is another one that they've been laying people off, but that is typical. What you see is the earnings growth doesn't really come from a huge expansion from revenue because revenue has already been soaked up. Like there's not much more growth that can be had. So then you got to cut your expenses. Well, the easy ones to cut, right? If you're not growing the business anymore, you cut growth staff, which basically you cut your sales staff, your sales force, all that kind of stuff. New product, like your growing product staff. You don't need those people because you're not growing the business. Now you're just maintaining. Not saying you're trying to lose business, but yeah. Alphabet's been kind of increasing earnings, but I mean revenue hasn't been increasing all that much, not nearly that kind of pace. So they're kind of increasing revenue. You'd expect revenue to increase. I'm not saying that you don't expect revenue to increase. It's not going to be flat. It's going to grow roughly at the pace of inflation. And the best companies like these that we're kind of looking at here, they're going to grow at a little faster pace than inflation. Okay, so inflation, what is it like? What 3.25%, 3.5%, 3%? So they'll probably be 8 to 10%. Makes sense. They're some of the best companies in the world right now. But their earnings growth has been 15, 20%, but they're not seeing that on the revenue side outside of what was that? Nvidia, Meta. I think that was it. Amazon's a tough one to kind of analyze because those two businesses that they have are so tough to really kind of break down. So the only thing I would say is like, it's not all great on the earnings side. It is very much a late cycle type of earnings story. It's all these companies are cutting costs to increase earnings. Well, there's only so much that you can do because once you cut staff enough, it affects unemployment, and then that starts to feed over into jobs, consumer discretionaries because people, that have been laid off will not spend, and then that just kind of dominoes into other sectors of the market, other sectors of the economy. So I'm not saying don't be bullish and don't continue to ride the wave. I've been saying that very clearly. The trend is very bullish. Continue to ride the wave. Continue to use stop losses. Right now we have a very clear spot here, still below January 31st. That is the low that I would say I would probably have a stop loss for now. Obviously, we're getting a little bit stretched here. I can understand taking a little bit off here. Maybe not all of it, but I mean, you kind of start peeling back. Maybe you put on some defensive hedges, some insurance if we start to see some big losses going forward. And if you're doing that, you're going out like a year plus. You're going out a year plus on options, on leaps. If you go buy protection, go out. Basically, you want to go out as far as you can, honestly. And then this is the main zone right here on the market. This 170 to 175, 180 level. This is it. Or I would say 166 to or 466 to like 470, 478 or something like that. Somewhere in here. Like this is like a very important zone. We get through that. I mean, that's definitely a clear change in direction. So, Outfunners, I'm just trying to be helpful. I would say continue to ride the wave bullish. I mean, we're over 400, 500. It makes sense that we probably grind a little bit higher as we go into next week. All the news headlines over the weekend will be S&P 5,000, SPY 500. Yeah, there you go. Like you'll see it everywhere. And but as companies continue to lay off expenses, lay off workers, lay off people, that will eventually feed into unemployment rising, which then eventually feeds into consumer stocks not doing well, consumer businesses not doing well, and then that kind of feeds into everything because they stop using business to business applications, and then business to business applications stop being used, and all that kind of stuff. So it'll snowball, but it takes a little bit of time. It takes a little bit of time. The other thing I'll probably say is you don't really know how far some of these tech companies really got to go to laying off people. Because over the past year, I mean, we've seen multiple rounds of big tech companies having layoffs. Google's done it like multiple times. I think they've had a layoff like once a quarter for the past year. A round of layoffs. Or maybe not. Maybe not every quarter, but it seems like it has been. It seems like it's in the news like every quarter. Or them or Meta kind of alternating who's doing layoffs whatever quarter. So yeah, I'm not trying to be cynical, but like we're not gonna just continue to go higher because I mean, where's the revenues coming from? And that's kind of the problem. That and there's better opportunities out there. You know, China. We looked at China this week. India's going to continue to be a driver going forward. They have a much better labor force, age, kind of breakdown. So commercial real estate's not doing that great either. I keep seeing things about buildings getting sold for like I think I saw one this morning on X, like $9 a square foot. Did I like that one? I thought it was a pretty interesting one. No, I don't think I did. So yeah, so here's this is put out by Carl Quintanilla. Was just a matter of time before the balance of power swung. U.S. employers are laying off staff, forcing remote workers back into the office and becoming pickier with their hiring decisions. Yeah, I mean that's typical because they can't. And the reason, and all this is saying is, those companies can't grow revenues. Like it's so hard to grow revenues that the only way they can expand and grow the bottom line is by getting rid of employees and hiring employees that want to do what they want to do at the price that they want to do it at. So, yeah, it is what it is. I mean, it's typical normal market cycle stuff, but I mean, do we go to SPY 520 before we top out? Sure. But you ride it with stop losses. You look for good pullback spots. If we keep going higher, then you just move your stop loss up behind that. That's what you do, man. It's called being professional. So, Outfunners, have a great weekend. Enjoy your Super Bowl weekend. And we'll be back at it Monday. And don't forget, we do have a very important week of inflation next week, Tuesday and then Friday. Outfunners, have a great weekend. Take care, Black Beauty.